Guys, it's Max. How's everybody doing? I appreciate y'all for being here. All right. All right. First, let's check out the market. Look at the NASDAQ. Gap and go. Second day in a row. We've had a bullish up gap. We had one yesterday as well. Look at the SPY. Same thing. The bullish gaps are green. The bearish gap is red. Now, the last time we were up here, there was an imbalance of sell orders that was created back here on the day after Christmas. The Grinch stole Christmas, Thursday, the 26th, where the market set a high. And then actually the Friday, the 27th, there was a huge imbalance and there was a big gap left behind. In any event, we would expect the gap to be resistance first time we get back into it, maybe even the second, who knows, but it definitely served as resistance here. Will it serve as resistance again? Who knows? We'll see. If it does, we might expect the market to get down into one of these other bullish gaps and then maybe buyers to be there. Maybe we're stuck in between these gaps, but it is option expiration Friday. There's been trades that I've been putting on paper forever that expire January 17th. And so those are all expiring now, and a bunch of them are good. So we're gonna take a look at them and talk about my theory of options. A lot of you guys know that already, but I'm usually just trying to create a trade that has as little risk as possible and as much upside. That's all I want. I mean, my dream trade would have zero risk and full unlimited upside. Now that's not realistic. Or it is realistic. You can buy the stock and you get full unlimited upside, but you don't get zero risk. So in any event, so let's look at some of these. So this was back from November 6th. This was the day after the election. Or this one right here. This was a DJT for the day after the election. And this one expires in 3 hours. So let's look at that $170 winner. Let's see how that worked out, or let's see what it was. It's 4 legs. It was a risk reversal or loaded dice, the trade I talk about all the time. Anyway, it's a trade that has a giant flat spot in the middle where you just make the income, but it has a bonus area where if the market would have gone up further, this trade could have made extra, but that's not going to happen. That's not going to happen with this one. This one was $1,800 risk, and it looks like it made $162. But that's for, 2 months. It's about 8% return for 2 months. And it had a chance at a higher return. So let's look at a few of those other ones that expired in 3 hours. Bullish loaded dice on DJT. Trump year-end trade. Here's one I did in Russell, IWM, and it just had 3 legs, but it was the same type thing as the last one. It had a big flat spot in the middle, and that's where we landed. Let me try to show it better. Yeah, so that's, I was thinking, this was on the IWM, the Russell. I was thinking that we might have a, face ripper into the end of the year. It didn't happen. This one, made a $453 credit on $4,000 worth of risk in about 2 months. So that one worked out well as well. All right. So what's the biggest pain one? Well, that doesn't really count. That's a hedging one. Anyway, forget about that one. But the biggest pain, like speculative one, was the bullish loaded dice. The day after the election, I was like, it's obviously going to be good for Trump. And I was trying to show it wasn't too late at that point to put on a trade, earn an income, and have a chance at some upside. This one had 4 legs. We were selling puts to buy calls. And this one worked out really nice because this one got in the bonus area, just had to get above 35. But in any event, that's I hope somebody put that on or something like that. I did not do any DJT trades. I've mentioned before that I wasn't as big of a believer in the phenomenon. I thought he'd mess it up or something. He did great. He didn't mess it up. So anyway, all right. what else do we have here? I remember January 17th was just a big expiration. So a lot of these, I did a million of them. Like here's a, well, not that one. That's something different. But I'll go to the ones we did yesterday. I'm going to go to more recent history too. Hang in there with me. But you can see all of them. Some of them are in the bonus area. They're all the same trade. Loaded dice. I mean, it's all the same trade. Um, Bullish hedge on Nvidia. Why would anyone need a bullish hedge on Nvidia? But I think it was back in November, and I was like, okay, well, wonder if Nvidia goes up the rest of the year. What would be a way to play that? And so we looked at something. I forget exactly what it was. Anyway, that one worked out well. I think it was. It doesn't even matter. That one's not that good. All right, let's go to recent history. Of course, those ones worked out well. Anything that you went long on in November, that was a great opportunity. All of those trades earned an income also and had upside. And that's what I was trying to show. That's kind of the theme of, that's kind of my theme. So let's look at a more recent one. So maybe you saw yesterday or 2 days ago, whenever we had that first bullish gap, I showed you guys, I said, okay, if this gap holds, we can put on a trade, 3 legs, and we can use the gap as what we're going to defend and use the area of the gap as our strikes. 588 to 582 was where the gap was. So I said, if you think that gap's going to hold, you can sell that strike, sell the 588 strike, and you're essentially buying the market at that level synthetically. Well, anyway, but then in addition to that, we can take some of the money we earned, some of the credit, and spend it on a call. And we've got the market is right to the edge of it. So, I mean, all we need is, if we get 601 by the end of the day, this thing's worth $350, and it only cost 1,000 2 days ago, and you got 151 initial credit, $151 initial credit. All right, so if it goes up to 601, it's worth 350. So that means it's worth an additional 200. When you sell it, you'll make another 200 in addition to the 150 you already have, or you'll make another 100 in addition to 200. 200 plus 150 is 350. Okay. But in any event, we'll see. It could also not do that. It could stay here, and that's fine too. And even if the market, goes down into the end of the day, because this thing had a buffer, it's fine. So that's a good one. I would wait till if you did that one, wait till the end of the day. We'll see if your lotto ticket pays off. Take that off at five till. Okay. Now some of these other ones don't go off today, so we won't be looking at those. But the ones that expire today was the one I just showed you. We have a ULTY trade, a trade that they did that expires today in BlackRock. Let's see how they did. Well, they did pretty well. They had 7,000 shares, 900, it's 967. And the market has since rallied to 1,000. Unfortunately, they sold to more than 1,000. It rallied 1,008. Unfortunately, they sold the 1,000 strike call. But then they bought the put for protection, so they didn't have. Let's see what their loss was in this trade. It wasn't that much, their possibility of loss. Let's look at. Sometimes you have to move the target price to see different areas of the distribution. Yeah, they were risking about 315,000 to make about $250,000, and they made their $250,000. They got a $13,000 credit up front, but then they're going to make the rest of it when they take this off. So and roll it. So that was a good trade for those guys. Little BlackRock. What else comes off today? Okay, JP Morgan had earnings, and I said, here's a bullish 3-legged risk reversal. It's the same. I do the same trade every time, or the same theme of it. Sell puts to buy calls. In a bull market, if in a bear market, you can do the reverse. You can sell calls to buy puts. So this JP Morgan's right on the edge of of getting to the bonus territory. But basically, this one was $142 credit for about $1,100 risk. If JP Morgan would have really blown out earnings, it could have been worth more, but it looks like this one, you just get to keep the credit. But that's not bad for 3 days work. All right, I'll find one that didn't work. Here's a bearish loaded dice. Here's the inverse trade. I always say don't do both of these because unfortunately, the bearish one, because there's no such thing as free money. If you put on both trade, the bearish one and the bullish one at the same time, because there's no such thing as free money, one of them will generally lose a little bit more than the other one will make. And if it wasn't that way, everyone would do this combination of trades. But sure enough, that's the case too. So if you were bearish on JP Morgan, you could have done the reverse trade and you'd be down $842 right now. But it's still, in my opinion, not a bad way to make a bearish bet. It's a decent way to make a bearish bet because you get an income, and I really like the trade. If you guys have a different way to do it, there's so many different combinations of options and option strategies. So not the only way to do it, but the bull trades worked out nice on JP Morgan this week for sure. Okay, well, I'm gonna let you guys go. You guys have had enough option stuff, but let's look at one. But I want to show one thing. Let's look at something we can root for next week. So Planeteer, they have earnings coming up February 7th. So I made a bullish play for their earnings. Also, SMCI has earnings coming up at some point. I guess it's the same expiry. So I made a bullish play for that one also. So and I'll share these in the link and in the Discord. So I mean, I love this trade right here. Planeteer, you're selling puts. So you're essentially, agreeing to buy this asset at 65, but you aren't going to, and then agreeing to sell it at 60. So you're only on the hook for 5 points. You do that twice. There's 2 lots. Okay. So now you're on the hook for 10 points or $1,000, but you receive a credit for doing it because after you sell these puts or sell this put, buy this put, so sell a put spread, then you turn around and buy this call spread. Okay. And so you have $170 profit if this stock goes nowhere between now and earnings. As long as it doesn't drop more than 9.9%, you should be all right. If it drops more than that, you're going to be staring at a loss. Max loss is $830 on this. But if it goes down less than 8% or doesn't go down more than 8%, I'm sorry, and doesn't go up more than 19%, you just stand to make the $170. But realistically, what's going to happen is these guys have earnings coming up. And in the week they have earnings, especially if they get a good earnings report, somebody that had this position on would try to take it off in here somewhere. But in the worst case scenario, if you held it all the way, as long as you were between those parameters. So your bonus time starts up here, at 90 and 100. I don't think it's going to do that, but heck, it's Planeteer. It could do that. It's only $830 risk. You can compare this to buying $830 worth of calls, and that's a good alternative also. You can just do that. Just find it, that's a similar trade. But you can't do that for a credit. And on calls, you don't make money if the market goes nowhere or down. But it's another way to do it. You'll still darn sure make money if the market goes up. So this isn't the only way to do it. I'm just giving this as an alternative to either buying stock, where you're on the hook for a big loss because stock can go down to 0, or calls, where you're on the hook for catching all that time decay. You're paying the time decay when you buy calls. So I'm reverse the transaction where you're selling the options to the other people, taking the low profit off the top, making a buffer for yourself, but then at the same time, getting you some, putting some YOLO action on the deal too. You're going to try to, hopefully before earnings even gets here, it rallies into earnings, and it's at the first standard deviation by the time, you know, that that's what you're hoping for on this one. So anyway, it's just one way to do it. If you guys have a better way, let me know. I'm always looking for new and better ways, but I like this little trade. Okay, so I'll share that. Now, also, here's the other new one. SMCI, same concept. So I don't have to go through my spiel. You guys get the concept. It's easy peasy, right? Risk $1,100, you get 210 right away. You don't want the market to drop more than 10% or this is going to lose, but I would say that any strategy you do is going to lose when the market drops more than 10%, any bullish earning strategy. So, I mean, I hate when that happens, but that's the way it goes. That's the game. That's the way the game's played. But I love that it can drop 7% and you make 20% in a week or something, or well, 1, 2, 3 weeks. Okay. Anyway, all right. So that's one for SMCI. I'll share that one with you guys as well. Hit me up in Discord. I'll also put the Discord link on this video. Hit me up in Discord if you have questions. These are complicated trades, not for beginners. I'm trying to cultivate an audience of people that already trade options, and a lot of people in my Discord already trade options and know a lot about them. It's in a beginner's trade, but if you want to learn, come to Discord and introduce yourself, and we're pretty friendly there. All right, guys. Well, I appreciate you. All right. Have a good one.